Hey guys, welcome back. Drip Coach here, where we don't trust, we verify, and operate with integrity and transparency. Once again, doing a walk and talk around Medellin. And content for today is based off of the $18-20 billion liquidations we saw on October 10th. That day will live in infamy from now on until we have something worse, because it was multiple X's bigger than the biggest crash we had before, which was FTX. And it's crazy because it had absolutely nothing to do with like paper Bitcoin or the whole scam that Sam Bankman-Fried was running. You could say there was some scam, but just essentially what really triggered it is that there was, yes, some insider trading, but the biggest liquidations came from bad Oracle data or improper de-pegging or listing of token prices. So Binance recently stated that they're like $283 or $238 worth of refunds that they're gonna get back because they had bad Bitcoin price data. And even I think it was USD, one of the USD stablecoin pairs de-pegged as well, like down to 65 cents briefly. So I learned a couple lessons from this. I didn't get affected negatively. I actually got to pick up some cheap Bitcoin because I had some buy orders in. So lesson one, this I got from Altcoin Daily. Have some coffee orders in. And what that means is about $5 of money sitting on the sidelines at buy orders or levels for buy orders that are like well below what you would think would be a logical price to buy. So it's just like $5, and mainly for like really, really good alts. You know, something you could get quite a few tokens for $5. And it should be basically, you're hoping, not hoping, but in the event that there's a depeg or a flash crash or something that causes that asset to go down lower than normal, you would pick up some really cheap prices. So you could definitely do some coffee orders for like Bitcoin or ETH or Solana, but you're not gonna get that many tokens for that $5. So the goal would be to have it on some kind of high performing or top level alt. Like, I can't think of one right now that comes to mind, but some of the top 200s where they have a really, really cheap token price. And if it flash crashes, like say a SHIB, for example, but that's on ETH, but either way, SHIB $5, you get a couple thousand tokens. I don't know if that deep or flash crashed or not during this, but the point is, find a couple, put a couple coffee orders in. It just sits there forever. It's money you won't miss. You only do like $25, $30, something like that. So it's only on a couple tokens. And if this happens again in the future, you win. Next thing that I learned from that. So that's one way to benefit. Two is have buy orders in to buy the dip. And I showed this in my Telegram channel, but it's all about the 50-week SMA and the 20-week SMA. So literally this dropped right below the 20-week SMA, but it didn't get anywhere near the 50-week. So if you have buy orders in between those levels during a bull market, it's a pretty safe bet that you'll be able to pick up some cheap tokens. Specifically though, only in your high value alts like Bitcoin. I wouldn't fuck with anything else. So that's another lesson learned. Number three, this is kind of on the dark side, but nothing happened to me with this, but this just showed me the volatility and how it's all based off of Oracle data, centralized exchange data. So say, for example, like me, I have a loan on Ledin, a loan on Morpho. What happens if one day in the future, they have bad data and my loan gets called? Because, you know, I may be sitting with 50% collateralized ratio, but all of a sudden there's a flash crash of 25% like we saw yesterday, 20%, I'm sorry, like 2 days ago. And then something else happens where it drops even lower. So I wasn't anywhere near getting called on the range. I think mine is about 67K is where I start to get margin called or that loan gets liquidated. But it just made me think of like, yeah, maybe I want to have that even more over collateralized. Maybe 50% isn't enough. So beware of that because you are at that risk, because essentially it's the centralized exchange data. Like you have no control over that. So while you're sitting there making sure your loan is at 50% or 40%, there could literally be some random ass event that causes this to happen, and you're just gonna lose all your shit. So that is a risk that I never thought about until I saw this. And even though, like I said, I was nowhere near that level, it just made me think, okay, definitely be more cautious, because I believe this was solely on Binance and no other exchange had this problem. But this is not the first time that I've seen this happen where they've had liquidations. And part of me thinks it might be on purpose, to be honest. I don't know. So that's another lesson learned. And then there was something else. Oh, I think this is really bullish. So the fact that BTC went from like 126, 125, wick down on bad data down to 101, I believe. That's still less than 25% crash. And that wiped out 6 times the amount of volume that we had in the worst one in FTX a couple years ago. And it's already bounced back to like 115. So the big thing that was an aha for me is that, one, people are still treating Bitcoin as this basically gamble play with multiple leverage, way more leverage than they should. They're not staying humble, stacking stats. Raoul Pal 80-20, it's all about, oh, I want to get rich. I'm going to use 1,000x leverage, 100x leverage. So that's bullish to me, because that means we're still early. People are still treating this as a speculative trading asset, get rich quick scheme. They don't understand that it is literally rewriting the financial monetary system. They're not looking at it as a long-term store of value and eventually replacing peer-to-peer cash as is written in the white paper. So I'm like, yo, this is amazing that we're still this early. And then another positive thing for this is, like I said, how fast it bounced back and the opportunities that we still have with this going forward. So yeah, it sucks to see people get wiped out, but you shouldn't be using leverage in the first place. Like, as Raoul Pal said, it's already volatile enough. Like, why do you need more than a 50% CAGR a year? That's just crazy. Been walking around Central Park area. So yeah, that was my lessons learned from this. This will be probably a week after this event took place, but just kind of stamping this so that in the event, you know, this comes up again, can remind myself of the pros and cons of all this. Even with market manipulation, there is a silver lining, an opportunity. And again, we're still early because people are still treating this like a damn lottery scratch-off ticket. And that means those of us that are staying humble, stacking sats, will be able to still forever gain an opportunity. And the fact that it is so volatile and it moves like this is the reason we have this opportunity. Like, if this were sitting more at the gold market cap, it wouldn't even budge. So as long as you're not doing anything stupid, you should be able to benefit from this as well. All right, hope you guys enjoyed that reflection lesson and a walk around Central Park. Smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible.